1, 2, 3, 4, 5. That's right. We've had 5 red days in a row. Stocks are starting to get a little bit sad. They're red. And we're right back to neutral, exactly at 50. The shorts are starting to pile in. So where could stocks go this week? Here are your key dates. Here are the exact notes I'm going to use this week. If you can watch all the way until the end, I will give you more detail, but you shouldn't need more than that. Stocks are currently going down. What are they likely going to do? At least go down a little bit more. And that's the key takeaway for this week. If you can bear with me for a little bit longer, I'll show you exactly what I mean. Right now, stocks are going down. They're going down and volume is actually rising. So what does that mean? People are starting to get a little bit scared. As more sellers come into the market and the price decreases, it basically means that people are willing to accept a lower price than before. Now we're approaching support. So yes, people do sell on support. But here's the interesting part. Right now, the higher low has been lost. So our notes change. We were saying that weekly higher lows were sufficient and we could have gone higher till the end of August. Well, since last week, now we have a red light on the daily or full bear. We're 4 out of 4. Lower highs are sufficient now. That's it for going into Monday. And then after that, on the weekly chart, we closed out with a weekly bearish engulfing candle. Like, how are you going to tell me that's bullish? Yes, we're still at all-time highs. Yes, it's still 1, 2, 3, 4. It's the 5th strongest close ever. It's still really strong. It's not strong enough. We no longer have number 1. Number 2 could come into play. Number 2 is a 10% correction. Number 2 means that as of right now, we're down by roughly 3% to our low. That could happen 3 times more. For us to go down to support, which is here at number 2, that's basically 3 times more decline. So if you're not ready for, I can't write it all. There's a better version of the last 3, but if you're not ready for 3 times more pain than what we just had, you need to watch till the end of this video. I'm going to try to make it as condensed, as easy as I can. Right now, the popular stocks or the mega caps are going down. So it's time to get big fat again because looks like Eli Lilly or going skinny is working. All right, so I joked about this where we're right back to neutral, but if we try to understand sentiment or positioning, what does this look like? It looks like a big old M. So we have higher lows, higher highs until we don't, right? High, higher high, double top, double top. Oh my goodness, lower high. That's right, lower low. Oh my goodness. Here we have 55. Here we have 55. Here we have 50 exactly. So these are lower lows. Now we're going to likely form a lower high wherever we bounce. So this could be an M. There could be more downside ahead, especially after a bearish engulfing candle. So if now we look here to our daily chart, what does that mean? Well, if you're not ready for head and shoulders, knees and toes, you might be a little bit surprised, but we could go down to where? Support. That would form an M. Right now, people are starting to stampede out of the market. For the summer, this volume is elevated. These tariffs might be real. And as investors, we have to be mindful of that. Short sellers have been short for a while, so they continue to average in here, but it doesn't mean they're profitable. It just means they're short, right? This is their position. So this is sentiment. It's how people feel. This is money at work. These are net speculators betting against speculators. So commercial speculators, if you're not sure what that means, you probably shouldn't be looking at this chart. It's not that important. What's important is this. We talked about how we're in fully bully boomtown buy all dips above 610. But as of right now, the rally to August 22nd, it was halted early. We have to scratch that out now. Why? Because we formed a lower low. We don't have just green lights anymore. Now it's green on over 610, but after we went to bearish on the daily, it progressed fairly quickly, right? Yes, that escalated fairly quickly. So red to cautiously red to basically 2 out of 4, which is it's 50%. So like a joke, if you went home with a grade and you said, "Hey mom, look, I got 50%. Is your mom going to say, "Oh my goodness, Timmy or Jimmy or whatever, you did such a good job. 50%, pat on the head. Here's a nice little dessert." No, it's not good enough. So printing a lower low, closing below once, hey, that's nice. We at least need to get to number 3 before we get to number 4. So what this really means is that if now we look here, I'll just show you my notes because I think that'll just be easier here. So let's just read these. Tara followed is in focus. So I'll ask you for a huge favor. If you could please consider smashing the thumbs up or subscribing to the channel. Thank you very much ahead of time. The notes are pretty clear here. So Terra fallout is in focus. Our algo now says we're bearish on the 1 day, starting to upgrade to the 1 week. That's basically this right here. So now we think about going green to yellow to red. Yes, it's still easy dollars. I'm still saying buy the dip. Why? Higher time frames are what I rely on. So when in doubt, zoom out. The 1 day chart doesn't really mean much to me. The weekly, the monthly, the quarterly, the annual progressively are more important. So that's exactly what it says right here. We've already bought our insurance. So if you're not sure what that means, encourage you to go back to last weekend's video. If not, what do? Now we wait. We have patience, or patience. Or what do? We go outside and enjoy the summer. That's what summers are for. If the weekly goes to 4 out of 4 bear or a full red light, we do not get ahead of our skis. We are patient. Why? Justin's buying more insurance on as early as Monday. I'll show you the note. Let's go to S&P 500. Let me zoom out for a second, make it a bit easier to see. So here's what I said. Pause if you need to. August, green, higher lows are sufficient, but as of right now, we have an inside bar. So we want to get back above 610 to make it easier to rally into this month. Think of it like now, as the new candle opens, it's like we have to be mindful of where we are on the highway. We're not in cruise control anymore. Why? Inside bar. We have to get above the candle high for it to be a cruise control on the highway. We're still on the highway, but now we're merging, right? We have to slow down. There was a town. There was a set of lights, and now it's yellow. Yellow means caution. Doesn't mean, oh my God, everything out, sell everything. No, it means caution. Inside bar. We're inside the previous range. So inside the previous range, we defer to the higher low. Low, higher low, higher low, higher low, higher low. That's the fourth one. Defense is forming. The bulls are in control of the monthly chart until they're not. So it makes it easier for us to say, hey, cruise control, that's a lot easier than having to worry about everything. At 61323, that's where things change. That's where I'm going to flip and I'm going to flop and I'm going to say, I'm starting to get bearish. If we make it down to 613, the weekly chart is going to go from 2 out of 4 to 4 out of 4. We're going to see red on the daily, red on the weekly, and then we're going to get 2 out of 4 on the monthly. What does that mean? We're starting to get a lot closer to 610, which is fully bully boomtown by all dips. So if we go down to 610, are you going to say this? Because right now we're at 621. If we dip by 10 more points, which is what? Roughly what we declined on Friday. Yeah, if we repeat Friday on Monday, what are you going to say? Oh my goodness, I wish I shouldn't have bought. Why? We went lower. Are you going to say, oh my God, I wish I would have bought. Stocks went up. Same thing if you don't own. Avoid what you're going to regret more. Number 1 or number 2. And then pair that with making a plan, because making a plan is what you need to do. It's not trying to be a hotshot. It's what if we go up? What if we go down? What if we go sideways? Aim to be this. That's what you want. Aim to be less surprised, not unsurprised. I've just gave you a range of outcomes on what could happen this week, and that's like as good as I can get. I've now warned you that I'm still bullish. So yes, today's video was red. And if you watched till this mark, I don't have to tell you how I feel. You watched. We are still bullish. I explained the reasons why. Annual higher high over the candle high. That's what this means right here. Above 610, it's fully bully boomtown buy all dips. This is a screenshot from last year. Why? Because technical analysis only waits until we get new candles. It's only just turned into 2025. There's nothing new. It's still easy money, still going easily higher. That's exactly what we're going to look at here. So beyond that, I'm trying to think about whether anything is relevant. We have these auctions. So the auctions are really the focus, but I don't think earnings are really going to move the needle. For me, it's really the fallout from Trump. So let me go back to my notes here. This is what I plan to do for the S&P 500, which is my my North Star, my guiding light. And right now, 2 out of 4 bear with a bearish engulfing weekly candle. I think I already said that. Closing at or near the low of the week. That's the important note. Implies or infers we're likely going to form a lower low. The question is, do we hold the low or not? If we don't, this is where it gets curious. I'll show you exactly what it would mean. Let's go here to bull and bear recipe, because right now we were bullish. Higher lows were sufficient, but now we printed a lower low on the weekly. That's what you see right here. Bearish engulfing weekly candle means that if we look nice and close, this candle low is below the previous one. So we have a higher high, we have a lower low. In this case here, we're just focusing on the lower low. So that happened. Then we close below it. All right. If we print another one, which would be a failed breakdown, right? Failed breakdown means that we go below it, but we rally back up because we close back above, just like here. Print the lower low, close back above. Print the lower low, close back above. Those were two instances where that was a trap. It was a fail, breakdown, higher, higher. If we want to fail breakdown and go higher, we probably have to do it again. If not, if we close below, that's 4 out of 4. 4 out of 4 is 100%. If you said, hey, mom, I got brought home 100% on my math quiz. Oh, Jimmy or Timmy, you are so smart. You get a cookie. I like cookies. Maybe you do too. So if you want cookies, make sure you understand what these dots mean. It's not simple. Don't overcomplicate it. With that said, subscribe and come hang out at 8:30 on Monday if you want to find out more. Thanks so much.